What is up, YouTube? What's up, guys? The Composer Trader here, and welcome back to another post-trading analysis video. And today we're going to be talking about a Litecoin short that we took inside of the VIP Discord, which was the short right before the whole market started tanking towards the downside, which is something that we have been anticipating on, and it was absolutely amazing that we managed to catch that short right before Bitcoin decided to drop down aggressively. We were kind of looking for a short for a longer period of time, but we just did not get our hands on a proper short because of inconvenient timing. So it was absolutely amazing that we managed to still position ourselves to benefit off that move down, because that also brings us in a very comfortable position going forward if we want to start looking for high time frame accumulations later on, because we can simply be hedging. So I'm going to dive deep into the technical aspect behind this trade, and we're kind of going to combine it with Bitcoin right here, because we did use the context on Bitcoin to validate the short on Litecoin. Okay, so I'm not really going to be building a whole lot of context on Litecoin, because the context on Litecoin is, in my opinion, a bit sketchy. Since if we zoom out here, I was like, is this a high time frame macro range? Technically it is, right? We deviated that high, came into some supply up there, swept some buy side liquidity. It's not really a clean distribution model, but at the same time, we also don't really have a proper accumulation model at the bottom. So you're kind of like in the middle of nowhere. And I did not really look at the context on Litecoin. I just looked at this lower time frame TCT distribution model while applying the context on Bitcoin to validate the short that we were going to be taking on Litecoin. Okay, so first I want to be diving into just the technical aspect behind the actual entry, and we actually managed to take this trade live on stream, which was very convenient because it was a lower time frame entry, so it was easier to communicate once we are live. So we can basically see price from the bottom up here locally, put in a high, and then put in a higher low for a higher high right there. This is not a valid market structure just because you don't have the two consecutive candles going up, down, and up. In other words, the 6 candle rule. You only had one bearish candle going down, followed by a bullish candle, followed by a bearish. So you do not have the two consecutive bearish closing candles, and that's also why that is not market structure. So you skip over that pool, and then you have your higher low for the higher high. And you can immediately see already when you're looking at this V shape that it's a very broad V right there. It took a long time to reach that high again, while at the same time you actually deviate that high and you were building lows below, indicating that this is some sort of a proper ranging environment. Okay, so once we are uptrending, we obviously pull our range from swing high right there to swing low, and then that is going to be the range that we're going to be looking at for potential distribution models, because we were bearish on Bitcoin, which I'll be diving into after this analysis. So we have our initial range high, we have our initial range low, and from there we got that deviation towards the upside, indicating a second tap right there. Now, after putting in the second tap, we're going to look at, okay, where is our third tap POI? Now, zooming in here on a lower time frame, what we basically have is that at the moment of the second tap getting put in, because that is actually when we were already observing a potential distribution model, we had beautiful structure demands getting created on that breakdown right there, where basically what I wanted to see was price was just front running that supply on the initial pullback, went lower, and preferably what I wanted to see was, okay, price right here has an amazing range with a quality return to zone right there, kind of building up in some sort of a sell side trend line liquidity right there, indicating a quality return to zone, and the fact that the move down should be pretty simple once price is ready to get sold off, just because there's nothing in here from a demand perspective that could hold price up. So initially, the moment we created this supply, what I wanted to see was for price to actually come back down here, mitigate some more demand in this region right there, so that that demand is not going to be there anymore prior to creating our third tab. Keep all these lows intact, and then later on come back for the supply mitigation to also get better time displacement between your tab 1 right here, your tab 2, and then your future tab 3. And then we can short that model 2 distribution in confluence with Bitcoin right here. Now, unfortunately, instead of coming towards this demand zone where this demand is simply lower time frame structure demand, where I'm following this super low time frame pull towards the downside, making a lower high for a lower low right there, and then deleting these drawings, you can see the lower high for the lower low. And right there, if you pull it from high to low, you can see that you're leaving a super tiny inefficiency right there, which is the only structure demand. So this demand is kind of the only demand that's holding price up from taking all these lows. So preferably, again, after this supply creation right there, you want to see a move down into demand, simply stall around, consolidate, get that pullback, build some more liquidity below, on the way up towards that third tap to have an indication of the moment you get that breaker structure. Like when the moment you have that bearish breaker structure, if you got that slow move up, then you're building sell side liquidity, and that just gives conviction to the break. There's not going to be a fake break because that sell side liquidity is going to be acting as a magnet for price to come back down towards. Right? When you're coming up aggressively, building support on the way up, the moment you get that low time frame breaker structure, you're very vulnerable to getting a demand mitigation on a higher time frame, and then for a higher time frame, higher low for the higher high. Whereas if you're building liquidity below, the moment you get that break, price actually has a reason to go lower, which is to sweep the liquidity, making the break also stronger. So the context of how price is behaving prior to getting your breaker structure is also super important. But unfortunately, price already mitigated that initial third tap POI and then went lower. And this right here is no proper time displacement between your 1, 2, and your 3, and you also still had that demand below right there. While if we are zooming in, you can see that you did not even have a proper breaker structure confirmation because price went up, put in some sort of a higher low for the higher high, and then on the move down, you were simply just building highs right there. So you had 1 high, 2 high, 3 high, and 4 high. So each high was a lower high compared to the previous one, basically indicating that you are building liquidity within that supply. Whereas if you want like a proper bearish confirmation, you want to move up, the highs taking each other out, followed by an aggressive sell-off, breaking structure back to bearish, which is not the case right there. So there wasn't really any confirmation there, and we simply had to wait because it could be that this retest creates its own third tap POI that price then later on can come back for. So looking at what happened here is that we can see we mitigate the supply right there, but we're actually leaving some liquidity above us, like I just showcased. We're leaving some liquidity right there. So on a higher time frame, if we measure our first 5-minute lower high, you can see right there that you have a high and you have a low, and this is actually the first 5-minute lower high for the lower low, because this does not follow the 6 candle right there, because only one bullish candle towards the upside. So you do have your 5-minute extreme liquidity right there, which is around tab 1, always a good location for third tap to be taking place, little golden nugget right there. And at the same time, if you zoom in, if we start zooming in, I'm always checking if there's some refined supply up there that this initial mitigation or this initial retest did not mitigate. So I'm going on a lower time frame here. I'm looking at the 3-minute, and if we look at that upper section of this higher time frame structure supply, we can see that we have this 3-minute order block right there that is right above that lower high. So we have that extreme liquidity below that extreme supply that price then can tap into for a potential higher time frame third tap. So we did actually have some refined supply left that price can come back for together with that liquidity, and that's kind of what I was looking at right here for price to then again make its way back down to that initial demand that we were anticipating on that first rejection, but then now simply get a delayed move where we already got a steeper retest, come back down, and now we're simply watching for the exact same. price to kind of like go up, keep all this liquidity intact, get the bearish break of structure confirmation in there, and then start selling off aggressively in combination with that context on Bitcoin. Now, from here, if we let price play around for a bit, we can see that we actually went deeper than that initial demand, already sweeping some sort of sell side liquidity, making the return to zone lower probability. Okay, so I'm kind of waiting for price to come towards that low. So we're simply consolidating in here just like that. And then we're going to start taking that low and squeezing back up. There we go. Take that low, and then you're going to start squeezing up. Boom. Yeah, so initially, what I wanted to see is, like I just said, I wanted price to respect this demand zone so we can keep all these lows intact to continue with that high quality return to zone. That did not happen, okay? That did not happen because we actually surpassed the demand POI and took out this low right there and that low right there already, kind of ruining at that point in time the return to zone of this potential distribution model. And what followed afterwards was some sort of a consolidation period, which actually ended up being some sort of an accumulation, because right here, price was making lower highs and lower lows, right there, lower highs and lower lows, and then we kind of took the high, took the low, and took the high, obviously indicating a very good-looking ranging environment here. And you can see that in this consolidation period, you were building a lot of buy-side liquidity, okay? Where we are basically leaving all these highs here locally intact, right there. All these lower highs building up. Where price has its initial range low right there. Price has its initial range low, has that deviation 1, comes back inside, creates this 10-minute demand POI, which is your extreme demand, comes back for it, third tap, bullish break of structure confirmation right there, and then starts squeezing up aggressively towards the buy side. So we kind of swept this sell side liquidity already, creating an accumulation against us, and now price is aggressively squeezing into that third tap POI. This is obviously not ideal for our potential short, okay? Because what you want to see is you want to see liquidity pointing in one direction. When you have a model where the liquidity is simply pointing in one direction, those are going to be your best models. Now, what do I mean with that? With liquidity pointing in one direction? Well, you're building higher lows here. So you're building sell-side liquidity. If you get that move up, and like I earlier said, I wanted that move up to create its own sell-side liquidity as well, and you sweep this high, you're basically sweeping all buy-side liquidity because that high has resting buy-side liquidity above it. You're taking all buy-side, leaving all sell-side intact. And because these markets move from liquidity to liquidity, especially crypto, you're going to get very high probability short opportunities. But the fact that we now already started sweeping sell-side liquidity, creating buy-side in the process, that kind of ruins that total liquidity game with the liquidity pointing in one direction. Because we were building buy-side liquidity above, you also got this aggressive expansion. This is not particularly new buyers stepping into the market. It's all these highs getting taken out, all these people getting short squeezed. Okay? So because of that, we also created this demand POI right here. So you're kind of decreasing the probability of this play because you sweat partial sell side, create a buy side, and now got an aggressive expansion into that third tab POI right here. Okay, the third tab is not established yet, but you are creating a potential third tab from a distribution perspective. Now, two things that I like to talk about basically like every single day. It happens all the time that you can get an accumulation model against you that creates the higher time frame third tab of the opposing model. meaning you have some sort of a potential higher time frame distribution in the making. It happens all the time that you get these lower time frame accumulation models that create the third tab of the higher time frame distribution model. Happens all the time on any time frame, literally anywhere. Second, when this is the case, I need to see some good topping structure formations in here. If you slowly go up towards that third tab POI and you're building nothing but sell side liquidity below, the moment you get that bearish break of structure, you're expecting just a flush towards the downside because there's nothing there to hold price up. If you squeeze up towards your third tab POI, I need to see something in here that has either a good topping structure or some sort of TCT in TCT to give me that conviction that this pivot point is going to have some actual follow through towards the downside. A low time frame break of structure in these situations is not going to cut it because you had a super aggressive expansion towards the upside, and that can simply just be a low time frame fake break. So what we saw happen here was therefore extremely important. And that is that we got that initial rejection towards the downside. Like I just said, a low time frame break of structure like this is not going to cut it. Okay, this low time frame break of structure is not going to be enough for a higher time frame pivot point towards the downside, just because just looking at the chart, you can just see I can barely draw it. It's just irrelevant. It's irrelevant to the bigger picture. See that low time break of structure? It's irrelevant to the size of this range. It's insignificant, especially after such an aggressive expansion towards that third tab POI. Now, when you understand that you oftentimes get these low time frame fake breaks to create mid time frame accumulation or mid time frame ranges, you can see right here that we actually started ranging within that third tab POI. And that is where things got very interesting, okay? Because in here, we saw a potential distribution model. And that's when you can have TCT and TCT. So we're for now going to extend this range high to the second tab deviation high right there. And now zoom in. Or first zoom out and realize, okay, we have a potential 1, 2. This could be a potential 3 in the making right there, where our third tab on a higher time frame has its own little model 1 distribution schematic. Zooming in here, we can see that we had the initial range high, got that second tab deviation, got the move towards the downside, created equal highs on this tab, and then boom, took the high out right there on that second leg up right there. So we have a potential model 1 distribution. We simply need to start breaking some structure in order to confirm that distribution model. Okay, so right there we got that market structure low, following the market structure of the second tab, lowest point between tab 2 and tab 3 up towards that third tab high. And we simply need to wait for some sort of a break of structure right here, where if price starts breaking this market structure low, that confirms this TCT model 1 distribution, and price should not go above that third tab high and has an order flow objective of coming towards that low time frame range low. But because we're in a higher time frame distribution model, we can potentially extend that take profit target all the way back down to the high time frame range low. Because if we can start losing this local range low, that's when this high time frame play is actually in play. Okay, so we're basically on stream watching for that low to get taken out, monitoring Bitcoin in the process as well. So let's simply see what happens here. We can see price SFPs that low and then simply goes back up again, starts kind of like ranging in here. So we SFP this market structure low right there. SFP that low, extend the range low to, or extend the market structure low to right here. Boom. At that point, we also identified this demand. So this was the situation that we were in. We were ranging here for a pretty long time because you could have gotten a potential entry already in here, and this basically took another you know, hour and 30 minutes of purely just observing, paying close attention before actually pulling the trigger. So we initially deviated at market structure low and we came back up, and price kind of came for the extremes of that third tap expansion towards the downside, indicating for potential model 1 going over into a model 2 distribution. Okay, now below that market structure low we had 3-minute demand. Whenever I see 3-minute demand or just an order block right below my market structure low, when I'm already on a lower time frame, you don't want to enter immediately on the candle close. This is also what I exactly said on stream. You don't want to enter on the immediate candle close because you could get a fake break to mitigate demand to then go higher. Now, at this point in time, New York was also opened. You can see right there where the orange candle starts. That's your New York open, 330 UTC plus 2. You came down, got a massive spike up. So let's say you enter on that candle close, you're going to be in immediate panic mode, or maybe even spreads will actually kick you out on that initial expansion, especially if you're trading on a different exchange than Bybit, right? So we saw that close. I told everyone, be patient. We're in demand. You got the spike up. If I see this candle close bearish, or the second candle close bearish, about to exceed this low, that's when I'm like, okay, the fake break is out of play, and now we're actually going lower. Because after all, we did get a break of structure. So we are in a confirmed model. It could just be a fake break because we have the demand right there. So the moment I close below this low, that showcased that demand already delivered its expansion, and the purpose of that was just to sweep more buy-side liquidity to then reverse towards the downside. So checking the second candle right there, boom. The moment that closed bearish, literally this candle right there, the moment that closed bearish, that's the entry trigger. That's the exact moment of entry, okay? That's when you put the stop loss above that third tap high. You can also put it above that local high. It really doesn't matter. It's almost the same. And that's the exact moment where we went short. Because now what you can see is that you actually have a proper topping structure created for the third tap individually, which is the strength needed in order to get the expansion towards the downside. Because the moment we get this and we get the confirmation for the higher time frame model as well by breaking that market structure low, now we can say that the purpose of this accumulation was simply to deliver the higher time frame third tap of the distributions. And these market makers, they are not looking to protect their positions in that demand POI, because the purpose of that move up was to go short. It was just an expansion to fill more shorts to dump lower. So that's when you can look at this demand as fake demand, and you're not really expecting anything off of it. And then just a few minutes later, we absolutely smashed back down super aggressively, super hard, and literally 50% take profits were taken at the initial range low, and basically ever since we're absolutely tanking towards the downside, and I'm still in the other 50% of that position, which is obviously absolutely insane. Personally, I added a bit more on that 10-minute backtest right there. The moment I saw Bitcoin also giving even more bearish confirmation. So the moment we got that break of structure, what happened here is that we actually create equal lows. So we created supply up here. So we have our short confirmation is right there. We created equal lows on this low, which is just like a magnet for price. So the moment that, we were backtesting the extreme supply, which was right here, I was just so confident in price coming to that low, I just started scaling in more in shorts the moment we were coming down here. While also I was being hedged against some other longs, and then I closed that break even. It was a crazy play, okay? It was a crazy play, but shorted back down, took 50% out at the range lows, and basically I'm looking to take the other 50% to either lower levels, or I'm looking to take that into high time frame long. So I'm kind of going to see how the market's going to open Monday, right? We have plenty of news releases of wars, this and that over the weekend, causing significant drops towards the downside. So I'm kind of just looking to take some more profits on that position while keeping most of it open to see if I can take it into potential high time frame swing longs later on. But coming back to the context right here, we were looking at this individual model on Litecoin mainly because Bitcoin at that time was developing a bearish PO3. So the bias on Bitcoin all this time was to go lower, right? The bias on Bitcoin was literally simply to just go lower. That was the plan, okay? We wanted to go lower because you were building a lot of sell-side liquidity below. Now, what we had is we were actually at the same time that we were looking for the short, we were actually long on Bitcoin from right here. Right there, we were long on Bitcoin. We came back for the extreme demand and we saw the expansion towards the upside. But what you can see in this range is that price was compressing. So in this range, you were building higher lows while at the same time also building lower highs. Now, when you're compressing and you get an expansion towards the upside like that, your immediate reaction should be, how can this be manipulation? And you should be drawing a potential PO3 in the making. Again, PO3s, just like all the other concepts used in this video so far, has been explained inside of the TCT mentorship that you can find on this YouTube channel for free underneath the playlist section, okay? So at the same time that we were expanding up here, coming into resistance, creating a range, that's when Litecoin was developing with the short. Now, Lecture 8, TCT mentorship, PO3s, there are two exceptions of your usual confirmation, which your usual confirmation is to take that high, create a range, create a distribution model, right? Take that high, have your 1, have your 2, have your 3 right there, and then boom, break back inside, okay? The moment you get that third tap right there of your usual distribution model, that's a short confirmation. And the moment you have that pop back inside the same way you popped out, that's where you confirm the PO3 with your rotation back down towards this low. The exception is that you have an internal distribution model, and that's exactly what we got. Exactly what we got in this manipulation phase, where we get a Model 1 or a Model 2 distribution schematic inside of the main range, which was literally, this was the main range right here with your main swing high and your main swing low. This was your internal distribution model in confluence with your New York. So we got that internal distribution model, you got that bearish breakout structure, New York opened and was pushing price down. So we were expecting an overall rotation back down towards this low, and I was expecting for price to come towards that main low the moment you started losing this low. So it's kind of like a snowball effect where I was expecting a bearish PO3, but I was like, okay, if we're going to get a bearish PO3, there's a high chance we're going to come down all the way to the monthly low. And if we reach the monthly low, we're going to probably come down towards that high time frame key demand at around 98K. So it was basically the fact that we were expecting some sort of a bearish PO3 here on Bitcoin, which gave us the confluence to look for shorts on Litecoin, because that internal distribution entry on Bitcoin is way harder to trade than the high probability TCT and TCT distribution model on Litecoin. So we're basically using the context of Bitcoin, and then we're searching for these altcoins that have the highest probability TCT developments from a distribution perspective to benefit off of it towards the downside. Because also when Bitcoin is going to dump, Litecoin is most likely going to be dumping more, allowing for higher RR entry opportunities. Okay, so we basically had, to summarize it, we had a Model 2 distribution schematic where the third tap had its own Model 1 distribution, which was needed because we had a very aggressive expansion into that third tap. And when that's the case, you need some sort of a good-looking individual topping structure for that third tap. Do you want to have conviction that this demand is going to be failing? We were able and qualified to look for the short because Bitcoin was in a bearish environment. And those are always going to be the highest probability setups. Having a clear directional bias on Bitcoin and then trading the highest probability pair out there from a TCT standpoint. Okay? So if you have any questions, guys, you can leave them in the comments below. Overall, all these concepts have been explained inside of the TCT mentorship that you can find on this YouTube channel for free underneath the playlist section. Also, all these trades are taken live inside of the VIP Discord. So if you're interested, the link to that is in the description below. And I'm going to see you guys all in the next one. Peace out.